First and foremost, thank you so much, Sanjeev, for taking this time out for all of us. Though you don't need an introduction, but it is my absolute privilege to introduce you on this forum. Sanjeev Sanyal is the principal economic advisor to the Prime Minister and Government of India. An internationally acclaimed economist and best-selling author, he spent 2 decades in the financial sector and was with Global Strategist and Managing Director at Deutsche Bank, almost till 2015. So he brings with him huge real-life experience of global and emerging market economies. He was named Young Global Leader by the World Economic Forum in 2010. He is also a well-known environmentalist and urban theorist. He was awarded the Eisenhower Fellowship for his work on urban dynamics. He has been a visiting scholar at Oxford University and at Institute of Policy Studies, Singapore, and a senior fellow of the Worldwide Fund for Nature. He has also served on the Future Cities Subcommittee of Singapore government and tasked with building a long-term vision for the city-state. Beyond this, he has written many books. He loves history and writes on that. While there is so much more that I can talk about him, but it is best that we all hear from him. Here we go, Sanjeev. The first question, of course, is all of you have definitely brought India on the world map. From being the 20th large economy to 5th large economy, fastest growing major economies, and heading towards 3rd largest economy by 2027. And beyond that, the audacious dream of being the developed nation by 2047. We at PL have termed this decade as the golden decade for India. And we are extremely happy to learn from you as to what is the big picture that you all had created some time back, which translated into a few policy interventions. And in achieving the big picture for India, what are the few more steps that we need to take that we continue to reign as the major one of the world's major economy growing at fastest clip?
Thank you very much for giving me this very generous introduction. Let me begin by saying that it's a pleasure to speak to you and all of you because I have spoken on several of your platforms, and so it's good to be back. I have the list of many of the participants, so I have known many of them for over the years very well. Okay, so as things stand, the Indian economy is in reasonably good shape. Despite especially given the shocks of the last few years, the COVID crisis, the war, the oil price spike, then the interest rate spike, all the uncertainty around whether the US is or is not slowing down. So in that context, I think we are doing rather well. As you know, we registered 7.2% GDP growth in the latest reading for 22-23. And my sense is that we will be growing in the 6.5% to 7% range going ahead. In fact, I would even go as far as to stick my head out to say we will be closer to the 7% mark if oil prices and other indicators don't go off kilter, because there's enough momentum from what I can see in the economy to actually hit something close to 7%, maybe even 7%. So we are doing well on the growth momentum. By all indicators, also the supporting things in the economy also look good, i.e. all the stability indicators are also in good shape. So despite the fact we are now into our third year of expansion, and virtually every indicator, especially short-term indicators that are high-frequency indicators like PLI, etc., red hot, there is still no sign of high inflation. Inflation has recently come down. It's about 4%.
Correct.
And as I said, if oil prices don't go off kilter, we will probably see it drop below that, because the WPI is already below 0, so it's already negative. So the pull, if anything, is downward still. And of course, as I mentioned, we are macroeconomic conservatives. So we take one step at a time. But nevertheless, I think it's reasonable to say that inflation is under control. The external accounts, there was an increase in the current account last year, but it again, I think, has drifted back to something that is more than manageable. Foreign exchange reserves stand at around about 600 billion. So all the macro stability indicators are also in decent shape. Third, the financial indicators seem to also be in good shape. There doesn't seem to, from our assessment, there doesn't seem to be any bubble anywhere. NPAs are still coming down. Bank lending is growing at a decent clip, I think 15-16%, somewhere in that range for some time. But again, NPAs are coming down, but very importantly, as I've said earlier as well, banking system expanding too quickly is also something that we take with some,
Pinch of salt.
concern. Yeah, we look at it. So this is the level at which we'd like to let it grow. So that too, it looks decent. Geopolitically, things are in good shape. Slowly but steadily, finally, you're seeing major companies beginning to put large capacities in India. And that momentum is, if anything, growing. And, we have some very, very good feedback from the trip Prime Minister Modi did very recently. So all told, things look in a good shape, given the global scenario. Now, I will like to point out that we are, as you are there are few rules of thumb that we have shown in the last few years. First of all, we are macroeconomic conservatives. So we will not try to force growth beyond what we think is doable under the circumstances. Even in the height of the COVID crisis, you remember we were quite conservative. So we are not going to blow that all of a sudden. So we are comfortable with something, given the circumstances, something in the 6.5 to 7% range is comfortable. Our assessment is that forcing growth above 7 in this situation would probably cause unnecessary stress to our external accounts, given that it would cause our imports to spike at a rate faster than our assessment of what our exports can grow at. The services exports continue to be quite strong, but goods exports, we need to be careful what will happen, because there is the fact that Europe is already in recession. The US keeps threatening to go into recession. So in those circumstances, we do not wish to force growth. If we can compound it even at this rate, it's pretty good. And then the good times will come at some point in time. And our game is that in that time, we should be able to force growth past 8%. And I can see that we are capable of doing it if the circumstances are right. Because what were the old constraints to very high growth rates? There used to be infrastructure. I think we are rapidly building out infrastructure, and that is no longer a binding constraint. Some parts of it are world-class, some parts of it need to get there, but it's not a binding constraint. Similarly, there are still all kinds of bureaucratic hassles in India, but again, they're not binding constraints. The financial system now is much cleaner, much better regulated than it's ever been before. Again, not a binding constraint. It's not perfect. And as I said, we will always be a little concerned if you suddenly get a spike of credit growth of 20%, then we will restrain it in some way. But by and large, the banking system seems to have cleaned, the culture has changed, and so on and so forth. So all the usual constraints to high growth, domestic constraints, what I mean, to high growth when the external circumstances are good, are not there. So When the time comes, we will certainly see very high growth rates. But since we are, as you know, conservatives, we will restrain it to something that we think is manageable for now. We continue to have the supply side orientation as before. We are supply siders. We are not demand siders. So don't ask us ever to go and pump, consumer demand.
Correct.
That's our growth model. We are very much about building infrastructure, reforming sectors and things like that. The infrastructure part is getting done. There will be some change in emphasis in the next few years from intercity connectivity to intra-city infrastructure. We will in the next few years reach a point where the incremental benefits from creating ever more highways will come off. Where we really need to invest is in the cities themselves, not in connecting them, which is what the emphasis had been so far. So you are seeing, for example, the change in emphasis already in some places like Mumbai, where we are doing a massive upgrade over the infrastructure. I apologize if it's chaotic right now, but let me tell you, it's all for the good.
Absolutely.
So we will begin to do the same thing in other cities as well. So intra-city infrastructure will become a major area of effort. There's also a change in emphasis in the type of reforms we do. So for, reforms, the economic reforms that we used to talk about tended to always be structural reforms, i.e. changing the overall structure. So, for example, GST, it's a structural change. Insolvency and bankruptcy is a structural change. There is now, however, a change in our perception that the real blockages in the system are not in changing the structures. There may be the odd thing. I mean, we still may need to clean up for example, the personal tax code, etc. But by and large, the big structural changes are done. What we really need to do now is to do the process reforms. These are really painful bells and whistles reforms. They are not necessarily stuff that hit the headlines, except in people in that sector. But they are the painful bits. For example, I'm working right now in dramatically expanding the patent system. Or I'm trying to reform the Legal Metrology Act, which is a obscure act that deals with weights, measures, and labels, but is a source of constant harassment of middle-sized business or small business, and so on and so forth. So these are the kinds of rules, regulations, and other things that we will. These are the bells and whistles reforms. You may not hear too much about them, but we are continuously kind of trying to clean those up. So the process reforms will become the focus of our reform effort from here on.
Absolutely.
The third big thing is we will continue to look at, making sure that the benefits of growth are shared widely. Again, we will continue with our current emphasis on the idea of Antodaya. Antodaya is about helping the last mile in the road. And notice that this is really about absolute poverty. It's not about inequality. We keep telling people that, look, we have perhaps, this government has invested more in welfare than any previous government, but we have done it with a particular worldview. And that worldview is about directly helping people at the bottom of the pyramid. It's not about some socialist rhetoric on inequality. We have no problem with billionaires, but our main emphasis is that the very poorest people have basic infrastructure for daily life to start with. So they must have some toilets. They need to have cooking gas. They need to have some basic food supply. They need to have, in their villages, Gram Sadak Yojana. So basically, giving an opportunity to the people at the bottom of the pyramid, an opportunity to participate in life, give them medical insurance. So you will see that our interventions are very directed at the bottom of the pyramid. It's very absolute poverty orientation, not relative poverty orientation. And we continue to do that. Obviously, as we become a richer country, the definition of absolute poverty will change and the sort of the cutoff will go upwards, presumably because we are growing. But nevertheless, this is the general approach. It is about directly helping the people at the bottom, creating safety nets for the poor, and so on and so forth. So that, as far as looking after development and the poor is concerned, that too will continue to be an emphasis. Now, I think I have droned on for too long. Let me hand it back so that you can ask some other questions and others can participate.
Thank you so much. I'll take up a few quick questions. As we come on the radar of the global boards, what kind of growth do you see forthcoming in FDI inflows? Will it be a paradigm shift in terms of the flows that we expect? Linked to that, if you see in your vision 3 to 5 years picture of India, do you see the Rupee trajectory changing?
So as far as our participation in global supply chains is concerned, there is no question that we are becoming more integrated with the rest of the world. All kinds of supply chains are getting moved to India. I mean, Apple is a very well-known example, but frankly, the place where we have already got completely integrated is in the services side. I mean, there is pretty much no major global company with, maybe with the exception of the Chinese ones, which does not have a development center or a back office operation or research hub or some such thing in India. And these are now rapidly growing. And we have more commitments to these from the recent trip that Prime Minister Modi has made. We are also very advanced in our discussions with the UK Free Trade Agreement, which should come through quite soon. So I'm quite certain that various kinds of integration with the rest of the world is well underway, and that will also come with FDI. I don't think we are playing in the same level as Vietnam. Vietnam is a fraction of our size, and we wish them well. They're a friendly country and an ally. So I'm not saying that Vietnam shouldn't do well. They should do very well. We are not competing with them. But the fact of the matter is that we are in a different game from what Vietnam is. And so I don't think we should think in terms of those scales. We are capable of absorbing, FDI in a totally different scale. Moreover, as with our own growth and our own financial system doing well, you can clearly see that over time, our savings rate and our investment rate is drifting up. So it is also the case that there is a lot of resources in India that is getting generated and getting deployed. You are yourself part of that process. So it is not the case that we are, completely dependent on foreign capital. We are increasingly generating enormous amounts of domestic savings, which our financial system, having been cleaned up, is able to hopefully deploy in a sensible way. I mean, we will keep monitoring it, and we don't want another round of misallocation, but we can see that we have lots of resources. The companies are cash rich. We are beginning to see Indian companies beginning to do a new round of investments in India. We can see that CapEx coming through. So I think I'm quite certain that things are in good shape.
So because we have unleashed.
Sorry, I forgot your point about the rupee.
Yes, Rupee.
Sorry. So as far as the rupee is concerned, that look, we want the rupee for the long run to become a hard currency. Now, before anyone gets excited and begins to say that we want the Indian rupee to replace the dollar or some such thing, not at all the case. There are many hard currencies on the planet right now, which include the Singapore dollar. It also includes the euro, the yen, the yuan, the pound. Hardness of a currency does not necessarily convert it into an anchor currency. As far as I can tell, for the time being, the dollar remains the world's anchor currency. In the long run, many things may happen, and the rupee is not competing with the dollar as a global anchor currency. What we are trying to do, however, is to convert it increasingly into a harder currency. Hard currency requires a few prerequisites. One is that it has macroeconomic credibility, that it is a country that has a central bank and a government that are willing to maintain the value of that currency. So That clearly is not the case, for example, with the Turkish lira. But in our case, we have shown that we have now managed, even through the COVID and the post-COVID spike in inflation, we actually did a better job than much of the West. So we have gained that credibility, and we should take benefit of that and slowly open it up so that the rupee is more widely used and more widely held. Of course, many payments-related microstructures will have to update it in India. But that the RBI is aware of, and they are building it out. But step by step, we will build it out. So in a decade's time, we hope to be in a situation where the rest of the world will hold Indian rupee assets in part of their reserves. The IMF will consider it a part of its SDR basket, and the rupee will be widely held and traded like any other hard currency. But it's a step-by-step thing. We are not rushing.
Absolutely. So that's the big picture as far as the rupee goes. Also, as we have unleashed, and all of us we see, but of course we've been knowing that the team at the center was working. Now we see huge amount of orders flowing in as far as railway is concerned, defense is concerned, and other infrastructure, including ports, airports. Road was a continuing story, and we believe that it was well-funded structure. How about the funding structure of some of these new capex in infrastructure backed? Are they through government alone budgetary allocations? Are they through some multilateral tie-ups?
So sorry, so wait. I've lost your question.
So what I was trying to say is there is flurry of orders as far as the, for example, railway is concerned.
Yeah, that
defense is concerned. Yeah. Airports or metros concerned. And wherever they are not in public-private partnership, the funding has to come from the either budget or some multilateral agency. How tightly financial closures have happened for the orders that are already announced and which are visualized? So are we good enough, well placed to fund all the infrastructure that we are visualizing to happen?
Let me say that the multilateral agencies do provide some money, but they are marginal to the conversation. We have outgrown them. The World Bank, IMF, and IMF, of course, only comes in if there's a crisis, but World Bank, ADB, etc., they do provide some money at the margin, but it is not the case. The bulk of the resources comes from ourselves, borrowed internally. But the fact of the matter is, when you're seeing all these increases and strong growth in
GST
collections, for example, we are using that increase in resources to do all of this. So we are seeing that a lot of this, there is significant tax buoyancy for some time, last few years, and we are utilizing that. So much of it is domestically generated. It is also happening because we have reoriented away our expenditure quite strongly away from revenue expenditures, as you know, towards capital. So there are many areas where we are actually cutting down on expenditure. Useless departments that had, outlived their usefulness are being cut down. For the first time since independence, you have all kinds of institutions being shut down. So that is certainly happening.
While I'll change the pivot a bit and ask one last question from my side before asking others to give. There are areas in which we still probably seeing the need to reform. For example, and this was part of the bigger picture which the government was always talking about, some form of legal reforms, farm tax, education reforms. Do you see some of these are being worked upon? The way you said that in 10 years' time, we can probably see that India is part of some of the global treasuries. Can we see in, say, next 5 years, some technologies, some work which is happening, which can reform these three aspects, and of course, policies? Well, legal needs technology, but as far as farm tax is concerned, it needs some kind of a willingness.
So frankly, farm tax, in my view, if taxing the agricultural sector by and large, in my view, is not a very major thing. The farm sector is now only 10% of the economy. If you have mental images of large farmers, let me tell you, there are almost none in the country. There are about 20,000 of them, maybe, or at most, even less. And frankly, introducing the farm tax will probably generate very, very little in terms of income.
Okay.
It may close off some way of diverting incomes and in order to avoid tax, but frankly, it is quite easy.
It's not a game changer.
It's not a game changer. It's at, in fact, it will cause its own complications, because farm income is at some level difficult to exactly tell what it is, and there'll be lots of unnecessary arguments and so on. And it will also, open up avenues for the lower rungs of the tax collection system to extract rent. So we are always careful. We have to always balance. So it's not just a political thing. It's also, the question is, do we create spaces for our own tax administration to do things where, we do know that there are bad apples in our tax system, particularly the lower rungs. And so it may be, we have to be careful not to let them out. So in that context, it may just be easier to continue with the current system, because if somebody owns 3 acres of land and is showing 10 crores of income every year from 3 acres of land, then it is not so difficult to work out that they are lying. So I would say that, it is a loophole, but it is not the biggest of loopholes in our judgment. It's not something we consider as a major reform.
Sure.
But the other issues you raised about administrative reform and legal sector reform, those are major areas of reform. Absolutely. And I would argue it's not a 3-4 year thing. A new cycle of reforms need to be done. It will take 20 years to do it, but there are huge benefits from it. And, just like in 1991, we started a certain cycle of market-oriented reforms, and we have by and large completed it over the last 30 years. This is a new round of reform we intend to go into. It will not happen in one government's term. It will happen it's a multi-term reform, particularly legal and administrative reform. I talk about it quite often. There is a growing appreciation that this is the next big round of reform that needs to be done.
Correct. Absolutely. I'll just give opportunity to Amish to ask one question, and I'm still left with a couple of, and I'll join you back once the rounds of questions is continued. Okay. Over to you, Amish.
Yeah, sure. So, Sanjeev, as you said that when it comes to social sector, this government has done a lot, whether it is like you're distributing your free ration to people, or giving them, you can say, or making electricity reach villages, or giving, for example, your gas connections to, you can say, people who are absolutely at the bottom end of the pyramid. And in the last few years, we have even seen some of the state governments also giving them free electricity, okay, and some of the other incentives. So do you think that gradually we are now moving more and more towards something like, you can say, minimum universal basic income sort of a concept in India? Do you think our economy has now reached a stage where we identify, say, the bottom 10-20% of the people and try to ensure them certain minimum, you can say, income, because that would be something very big in terms of, say, alleviating poverty and boosting the demand?
No, we have never been enthusiastic about the minimum basic income idea. We think it'll be largely wasteful. And yes, a former chief economic advisor had raised the issue, and it has been a popular thing in the rest of the world. My view is that all social experiments should be done in the countries of residence of those who come up with these ideas. If it works, then we'll try. India is not here to do social experiments for the rest of the world. So this basic income idea is definitely not something we will do.
Okay, sure.
Can I
And
take back one question here again, Amnish, which is about one of the important reforms which I believe which has happened is trying to formalize the economy. And in that also, we have worked on a very grassroots level through a lot of technology, be it by way of Aadhaar, moving on to, of course, KYC, moving on to a digital tax reform, and now UPI, and so on. But what are those such more big digital initiatives which you think can further, of course, e-way bill and GST, which can further help formalize the economy and
See,
also give impetus to growth?
so everybody's view is, see, the point is the economy is anyway formalizing. The question is, why do you want it to be formal? You want it to be formal so that you can see the flows of resources, so that, you want it to be formal so that, you create entities that can scale up. An informal sector company is not a startup because it doesn't go from where it is to becoming something bigger. It just remains where it is. So
yeah, you cannot provide capital, whether it is debt or equity.
So given that context, a fair amount of formalization is happening anyway. For example, payment systems are getting formalized. It's creating a trail of receipts and payments for even the informal sector. Similarly, GST payments is creating a web of data. So in the spaces people want, a certain sphere of data, I mean, even Aadhaar is doing that. So in a sense, even the informal sector has effectively got formalized for many things. Now, should the person who is in that space feel that this data, this information can be used to be leveraged to do something, then they will do it, and they are doing it. You are seeing formalization happening all the time. I mean, EPFO data is growing, many other things are growing. So in that context, I think formalization is happening, but I am not in favor of artificially pushing it, because after all, it should be a pull factor. There should be a benefit to formalizing, and let that be the driving force. Forcing people to formalize against their will is not our style.
Sure. Amish.
yeah, so Sanjeev, ESG is one area which you have been, you can say, talking about, commenting a lot. But when it comes to ESG, I think most of the things they started from the developed countries or the Western countries who have got, you can say, much higher income levels and much higher levels of, you can say, maturity in their economies. And per se, it puts some sort of a brakes on a country like, say, India, because we are dependent a lot on the fossil fuels and all. So,
No. My problem with ESG is totally different. You see, even if we were wanting to comply, and by the way, India is the only country that is complying with the Paris Agreement. So this idea that, the West is doing a good job.
I actually heard Prime Minister speaking that in US Congress, that we are the only country achieving the goal.
Yeah. So this idea that, that they are doing well, we are not all doing well, but we are the poor child in the class, so that we should be given support, is all bullshit. These guys are not complying themselves. Look, there are European countries, when it suddenly they couldn't get Russian gas, they are quite happy to go and dig coal. So this ESG thing is a complete scam. And as I've written about it in the last to last Friday, this ESG thing is a completely new form of colonialism. Basically, what they will do, after all, I have no problem with having some environmental, social, and governance norms. Right? Indian government also has lots. I'm in favor of them. But the problem is, there has been no discussion about the ESG norms that are now getting imposed all over the world. Who decides what these norms are? Even more importantly, who certifies them? Certain random think tanks, NGOs, etc., have given themselves the task of being the ESG purveyors and enforcers of the world. Who gave them that role? This is a form of taxation on the rest of the country by a tiny number of Western think tanks and NGOs. And they are all funded by the same three funding sources: USAID, Soros's Open Society, and Ford Foundation. Who gave these three foundations essentially to run this entire, essentially create a framework for the whole world? I'm sorry, we need to push back against this. And by the way, the pushback is not just in India, and this is not a Western world versus the global South issue. Even in the West, there is a huge pushback coming. I mean, you have an absurdity where the ESG, the companies which have the highest ESG scores are all the tobacco companies. So you have the tobacco companies with ESG scores out of 100 in the 80s, and Tesla, which is the pioneer of electric mobility, is 48. You tell me how this works. I mean, it's clearly a scam.
But where does it lead India? So do we?
No, we will push back against it. I mean, this is a complete scam, and we have made that clear. And we are raising it in the World Bank as well. This
So the
is
recent
India. Basically,
European...
we'll say we don't agree with these ESG norms. If we must have, otherwise, what's happening? You basically, a bunch of think tanks have created out of thin air a form of taxation. The audit firms, the consultants all love it because now this created a new form of them to suck money out. I'm sorry, this is an obvious and naked form of taxation.
Does it in any way impact the competitiveness of a country like India?
No, it doesn't affect our competitiveness. What it does affect is rent extraction by the West, or at least by these institutions. Why should we accept it? So it has nothing to do with competitive. We can produce perfectly good goods which generate very low environmental impact and are socially good. Everything is right, except that it is not defined in a particular way. For example, there is this whole discussion about green steel right now.
Exactly. Right? I was about to come to that.
Yeah. So green steel has nothing to do with greenness. The way greenness has been defined is that it has to be produced in a particular way where Europe owns all the patents. So this is an obvious and naked attempt to essentially extract rent. Yes, we will give you the certification if you produce it in the specific way in which we own the patents, and therefore you have to pay us for it. Or you have to buy our machinery to produce it. This is not a meaningful way to think about it. I'm sorry. This whole ESG thing, it smells of absolute hypocrisy. It has nothing to do with either environment or society or governance. And by the way, this is being called out even in the West. I mean, you have major companies in the West calling it out. So this is clearly a racket.
So coming back on the broader picture, while we are trying to put a lot of things through earlier Jan Dhan and many other reforms, making it transparent, do you all believe that the entire spend which is on Manrega, which has been happening across the panchayats and villages and spread of India, is also monitored as well, and we have developed such see-through mechanisms whereby we see that this money finally becomes productive?
See, Manrega has always been a demand-driven thing. It is a useful safety net, and we have used it in the past. Even in COVID, we used it essentially to provide a safety net. It is not a driving force of anything. And yes, we have, using the Aadhaar system, cleaned it up and made it a lot more transparent than it used to be. But the fact of the matter is, over time, as we become a stronger economy and presumably better safety nets, better incomes, the role of Manrega should actually slowly reduce. So it is, as I said, it is an emergency safety net, which is useful. And and during COVID, we did use it. But it is also the case that under most circumstances, over time, it should essentially become irrelevant. That is the aim.
Amnish, I would like you to shortlist 3 to 4 questions from Q&A session while I continue with one last question from my side. And that is, Sanjeev, if I summarize what I understood from our discussion, that we are happy at the 6.5-7% clip which we are growing as of now, seeing the way global growth picture is in front of us. And as the global scene improvises, we have all ingredients in place to improvise the growth rates, probably between 8 and 10%, which we have always inspired. I also understand that our own formalization efforts, tax collection efforts have, and of course, financialization of savings effort is yielding way to support our infrastructure investments, be it across defense, railways, and any other form of infrastructure. In this entire process, what do you think could be the key hiccups, starting from probably the change of regime or a short-term factor like El Nino, which could be very short-term, or some of the other major factors? What can really disturb this apple cart?
So obviously, El Nino is a random shock, and I have no way of guessing what impact it'll have any better than any of you do. So I will not comment on it. I mean, the fact is that we are now much more resilient to these kinds of shocks. It's not like how it used to be in the 80s or whatever, where these things would cause very major. I mean, it's not helpful if the rains are disrupted, and yes, it does cause disruptions, particularly in food prices. But it is not the case that it has the kind of disruptions it used to have. And anyway, last few years were good, so the reservoirs are reasonably full. So unless there is a very major shock from this El Nino, for even a small variation, we are in a position to be able to deal with it. Irrigation systems are vastly superior to what they used to be in the past. So,
Okay.
So that is not, I mean, it's a worry, but it's not a worry that really throws you off.
Okay.
I'm more concerned about what is happening in global systems as far as the economic trends are concerned. And we have seen a fair amount of messy management of inflation and so on in the rest of the world. And so, that is something we will watch to see what happens. I mean, we are hoping inflation does come off and then this cycle of tightening ends. Because, if you keep having tightening and inflation keeps getting sticky in the rest of the world, one, it will flow through to us, but more importantly, our export markets will remain restrained. And so, given that circumstance, I think the global inflation and tightening cycle is a concern. Oil prices is always a concern. They have come off a little bit and in a range where we are reasonably okay. 70 to 73 is fine, but moment it begins to go above 80 again, it goes into a range where it affects us. So somewhere in the current level is comfortable enough. Of course, we are always happy for it to be even lower. So these are the kinds of concerns that we have.
Sure. But do you think that we are on a kind of, with the current reforms, autopilot, where any regime change we can weather as an economy?
There is no such thing as autopilot. Because you have to do active management of the economy, because you are living in a world where all kinds of random shocks are hitting you all the time. So we are never an autopilot. It is mostly about the quality of active management that matters. And so that is the most important thing.
So Meet and Amnish, I would request you all to take the questions which audience has.
Yeah.
And wherever possible, if they have raised their hands and you want to include them, please do that right away.
Sure. So we have one question from the audience. which states that with GST collections have been soaring and income tax compliance is also increasing. So, have we reached a stage that we initiate some sort of direct tax reforms in the country?
No, I am, as the Prime Minister himself has said, the whole direct tax framework needs to be significantly cleaned up and eased, particularly on the personal side. So I think on the corporate side, I think taxes have been lowered, they have been significantly simplified, but I think on the personal income side, yes, something that we need to look at. Yes, I agree with you. And that may be, as I stated even earlier, one of the last few big areas of reform, structural reform that need to be done.
There is one question, talking about, you mentioned about, reforming the legal system. So, in terms of the judicial system, how do you see that changing, and what steps is the government taking to make it more efficient?
So this is something we are in the stage in this, like, where we would have been with the market economy discussions in 1991. Okay, there are a lot of incumbent forces that do not want change, but everybody agrees something needs. I mean, the wider society needs to have a discussion that there has to be big change. We cannot be a developed country with 40 million cases stuck in the legal system and enforcement of contracts being as weak as it is today. So It is very obvious to us that something needs to be done. But this requires a large-scale public debate, which is one of the things I'm personally trying to initiate. Because unless you get this debate, you won't get a long cycle of reforms. You'll get the odd measure, but that won't make any impact. What you need is a long cycle of reform, just like we did with moving from a license state-controlled system. It required 30 years to get out of it. I mean, there are still people in the system who have, will say, yes, market, etc. But when you push them, the default solution, even, by the way, suggested by the private sector, is very much statist. So, we had to get out of a certain mindset. And that is what we have to do, both with administrative reform, but specifically with judicial reform. So there has to be a wider discussion, and then that momentum will build. And over that, this is a 20-year process of cleaning it up.
Right.
How do you see, in connection with the kind of growth paradigm we are in across the major global economies, that we can be in for a rating upgrade?
Frankly, by any objective measure, India should be rated 2 levels above where it is now. Any objective measure. Okay. We are currently at the lowest rung of investment grade, with countries that, frankly, many of them have extremely dubious record in repayment and so on. But you see, the way, again, this is very similar to the ESG points. The way, for example, the sovereign ratings are set up is done in a way that is discriminatory towards a country like India. For example, one of the highest weights in the sovereign rating is per capita income. Now, per capita income has no bearing on your ability to repay loans. It is obviously, a poor person is not necessarily worse at repaying loans than a rich person. It depends on how much loans they have taken. It's about the relative to the loan taken, right? Which is fine. Debt to GDP ratio, I understand. But whether the person is rich or poor is irrelevant. A poor person, why does per capita income have anything to do with each other? And I have argued it before. My sense is that it's a proxy for skin tone. Yeah. It's just a purely legacy racist measure. And we should call it out. Because after all, why is it that countries, for example, in Southern Europe, who were going bust very, very recently, or Iceland, which had its entire banking system go bust, they are all rated investment grade? Why?
But do you think that all these efforts that we are making can result into any change? And if
No, absolutely, it will happen. As I said, we are already underrated by 2 notches.
And
So-
what do you think will be the key impact of this rating upgrade?
Well, frankly, I think ironically what's going to happen is that by the time the rating upgrades come, everybody has already mentally moved up. In fact, that's
Exactly.
the lagging indicator. Every time ratings are lagging indicators, even with company.
True.
Only after the company goes bust, does S&P, Moody's, Fitch, etc. downgrade it to default. So if any of you are investing based on the ratings, I'm sorry, you are making a mistake.
True.
By the time the rating agencies find out what's going on, the event has already happened.
Correct. So also in the same spate, do you think that our inclusion in MSCI bond index?
That, by the way, is a more direct thing.
Correct.
And we had done 99% of the things from our side.
Correct.
There were some frictional issues relating to tax, which were very minor issues, very frankly. And our view has been, frankly, that, look, there are other members of those indices who have similar tax issues. So if it hasn't caused any problem with them, why should it cause a problem for us?
What kind of impact will it have on our bond markets if we get included?
It will have some impact. It's a
Our
positive impact.
costs, our availability of funds, and helping the whole thing
So-
in terms of capital availability for growth.
So it has some impact. It's not a huge impact, but it is a perceptible impact to have large pension funds and others invest into India. So being a part of JP Morgan and whatever, various other indices does an impact. After all, you will remember there used to be the issue about our equities weightages in MSCI. And you will remember that we made various small changes as a result of which our weightages went up. And in fact, now that could really benefit us if Korea gets upgraded to developed status. So in which case, significant monies could come from that. So these are technical things that we need to keep track of and try and get them done. And making capital cheaper in India is a good thing. Getting the rest of the world to participate in our financial markets is a good thing. So generally speaking, but yes, as with anything else, we will do it in our own terms. You saw that with, whether it's getting oil from
Absolutely.
from Russia, or now with getting investment from Tesla. We will do it at our own terms.
Absolutely. So I have a very general question, which is that how does this decision making evolve? How do you all work as a team and create a voice for India or a stand for India? How does it evolve? Is there a frequency at which, with some data, that you all meet? Or is there a system of each key person making a presentation of his point? Or there is a way you are tracking? What is really happening that we are so agile? We all feel it that in this second term, India is agile and leading, be it in terms of at times putting some reduction in petrol diesel duties, to putting on export of steel some duty, to taking a stance in importing oil. On many events, we are just there when it is needed. We are not lagging behind in understanding and making a decision. Why has this change happened? What is going behind?
So an important thing to understand that we are a large government. So there are many nodes in which ideas, etc., originate and so on. But in the end, while there are a large number of institutions, the number of people who are involved is actually quite small. So there are, let's take pure economic management. Okay, so obviously the big management department for this is the finance ministry. So there are a bunch of economists there. I used to be there myself. Then there is Niti Aayog, which does a certain kind of things. Then there's the Prime Minister's Economic Council, which does a certain kind of things. We have somewhat, and then there is specialized institutions like RBI, SEBI, etc., which are working in that little silo. So for monetary things, RBI, for financial market things, SEBI, or trade negotiations, Commerce Ministry, and so on. So what do these people do? Well, for the specialized guys, it's obvious what they do. For finance ministry has a somewhat more general role, in the sense that they look at finance type things, but in a more operational sense. Like it's their job to keep track of things like the GST, monthly GST collections or so on. And so that is not something that, say, the Prime Minister's Economic Council is actively looking at. So it's their job. So the economists there, Anant and so on, they are looking more at the active running of the economy on a day-to-day basis. Then there is Niti Aayog, which is more looks at schemes and things like that, relationships with the states. So they also work with the states specifically. So they work on those kinds of things. And then there's the Prime Minister's Economic Council, which looks at very big picture issues. Should we or should we not expand the patenting system? Many of the things we do need not necessarily come under things that are pure economics. So we may get into something like look at how to think about what should we do with our national monuments, for example, is an issue which we are looking at, or even this whole issue about reforming the legal system or administrative system. That's something we'd look at, or how to think about the interconnection between economics and geopolitics. So that's obviously something that the Prime Minister's level will be interested in. So different people are doing something at different levels. Now, obviously, each one of these things is connected to the other. So the good news is that I am right now, as I speak, the Prime Minister's Economic Council is based in the Niti Aayog building. So obviously, I meet the Niti Aayog people all the time. I'm in touch with finance ministry people simply because, one, I used to be there myself personally. And also, we deal with them all the time. Anant Nageshwaran, the chief economic advisor, is a very close personal friend of mine. And of course, there are other players in this, like the cabinet secretary's office and so on. So, it all comes down to a relatively small number of people who personally know each other quite well. So that's how it works. It's quite fluid. There are obviously regular formal presentations that I will make, for example, since we are the Prime Minister's economic team, so most of the ones that we make will be to the Prime Minister. The ones that Anant makes will usually be to the Finance Minister, or the ones Niti Aayog with done to the relevant Chief Minister or Minister of the department. So that's how it usually works, but it's not hard and fast. I mean, there are times that I am presenting to, say, the Commerce Minister about something, or finance, or Anant is presenting to the PM, or somebody is presenting to somebody else. So it is reasonably fluid. We obviously, as I said, we personally know each other, and socially.
That makes life so much more easier to brainstorm, arrive.
Yeah, so I know I'm all the
collaborate.
time. Yeah, I'm all the time picking up a phone, or calling up people and say, let's meet for a coffee and sort this particular issue out. This sort of thing happens all the time. And let me say that when there's a particularly chaotic period, that's the only way things get done. I mean, for example, during COVID, there was a core group inside Finance Ministry, which included the secretaries, the chief economic advisor, and the principal economic advisor, who basically met all the time, because that's how the system kept running.
Absolutely. Once again, I will request Meet, you take up. A lot of people have asked their questions. Please scan through and take their questions.
Sure. We have one question from Mr. Ajay Bodke. So what impact do you see, on increasing embracement by political parties of various ideologies, to announce massive freebies to win elections, leading to a large unsustainable fiscal burden? So, what impact do you see?
Okay, this will have to be the last question because we are already been talking for about an hour.
Yeah.
Well, it's been very clear that the Prime Minister's Economic Council and me personally do not approve of this freebie culture. This is not to suggest that we don't see the value of direct interventions in certain things, but they need to be clearly targeted to the very poor. Generic things which generic open-ended reveries are not a great thing. They are costly, and ultimately, they ultimately do remember that you are pulling out resources from doing something else. So I am totally against it. Of course, state governments are elected by the people, And it's for the people of those states to ask questions about if the people in those states genuinely want those freebies, then so be it. Our job with the central government and for the Reserve Bank is to maintain the limits of borrowing so that these state governments are limited to whatever they are doing. If a state government wants to waste all its resources on doing, so be it. I mean, that's the price you pay for democracy. It is ultimately the public that has to decide what they want. The key is for the media, academics, intelligentsia, and investors to take a call and to make up their minds that, look, in the end, if you're doing a freebie, do be clear that you are consequently not investing in something else. But in a democratic setup, ultimately, this view has to come from the public. It cannot come from the economists or the central government. All we can do is maintain certain prudent limits on borrowing and other restrictions. That's all.
True. I know you've been generous enough to give us 1 full hour, and it has been an extremely interesting and open discussion, and we learned a lot. Thank you so much for your time.
Thank you.